Hey guys, welcome to another weekly analysis by Analytics, and we have entered the month of September now. It's been 9 weeks of crazy analysis and predictions, and being right on most of the occasions is always good to know. So as we predicted last week, the markets are range bound, and that's what happened. And the range between 370 and 420 in ETH was tested. ETH touched the lower range around 370 levels, and it quickly rebound back to 400 levels. So it basically tells that this was a very strong support that we predicted, and it hasn't tested the 420 since last week, but we expect that to happen sooner or later and see whether breakout occurs. So the markets have been consolidating for a long period of time as the volume have been just above or below average, just maintaining that level. Overall, the entire cryptocurrency market has been in consolidation. As you look, 375 billion, 340 billion, that's what the market caps of all the coins have been trading between. And it basically tells, a range of 35 billion, that's about 10% of all this, is a very steep range, and it's trading between that. So we might expect a breakout sooner or later. So if breakout occurs here, it might occur here as well, or vice versa. So it'll be interesting times to see ahead. So forecast for this week, as everybody watch us is for the forecast for this week. So for this week, we expect consolidation to continue for both the assets. That's gold and BTC. And what we are very happy about is that the S&P 500 crossed its all-time high, and it's making new highs every week. But it's not making gold and BTC drop below its support level, which is very good. That basically means there are a lot of buyers in the lower level, and it's always positive for the asset. We'll be going over what the Winklevoss twins, the Facebook founders, said. One of the co-founders of Facebook, who also happened to be the co-founder of Gemini, which is one of the United States' biggest crypto exchanges. And what are their staggering predictions of $500,000 BTC to take place? We'll have a look at their recent press release as well. And as well, Vitalik Buterin, the founder of Ethereum, just proposed a very big fundamental changes in in Ethereum. That was EIP 1559, which basically has a huge effect on the fundamentals of Ethereum. So how that will affect the price? So how bullish we think it will be? What will happen? We'll go over that. But what is very good for us, the stock market's making all-time highs, but it's not really affecting the prices of BTC and gold in a lot of level. They have corrected from their high, which we actually expected it to happen. But we expected it to go down even more. But it's maintained its support level, and from the past 2 weeks, there's been consistent buying. That means people are accumulating at these levels. And similarly, the dollar index has not stopped dropping, and it just kept on dropping. So for assets like these deflationary assets, these deflating assets, it's a positive sign because they're negatively correlated to the dollar index. So it's just a matter of time, when it just bursts out into flame and just rallies up. So starting off with, as I said, start accumulating it. And a recent statistics that came out of Glassnode, which is one of the best analytic provider for data for BTC, it basically said that 500,000 Bitcoin addresses have been accumulating. 2.6 million of Bitcoin has been accumulated. So just to give you numbers, there's about 18.5 million Bitcoins in the market. 2.6 million have been accumulated recently, which basically means that these addresses are just receiving Bitcoins. They're not sending it. So they are entered into accumulating stage, and they don't include addresses which haven't been active since the 2 years. So these are like new hodlers that have come up in the last 18 to 20 months. So it's a very positive sign. Bitcoin has now been consolidating for about 3 weeks at this level. So there's a lot of average buying taking place. And what was very good as well is because there was a monthly expiry in a CME group, a Chicago CME group, and the ICE is backed exchange, which is institutional investors. That's where they go. And generally at the end of the month, we see a lot of volatility because the expiry of the futures, and we expected anticipated a lot of volatility, and we expected the assets to go down a lot, but it didn't go. That basically means that people buying, and the long-term investors, the institutions, are feeling bullish in it because the price didn't drop and it's just maintained at those levels, and they are accumulating. So gold is also monitoring levels. They've been consolidating for a long period of time, gold now, and it looks like an accumulation period. Even though gold appreciated a lot, but BTC has been one of the best performing assets this year. With dollar index, has been declining and making a 7-year low recently. It basically is negatively correlated to gold and Bitcoin. So we expect some kind of a rally to come in place for Bitcoin and gold in the coming few weeks. And even though the S&P 500, as I said, is making a new 7-year high, a new all-time high, it hasn't really affected the price of BTC and gold in that scale. Obviously BTC and gold have corrected, but they haven't corrected a lot as we would have expected them to. But it basically means that there's a lot of buying at those levels. So what did the twins say? Everybody wants to know what the smartest guy in the room, smartest guy says. So the twins basically are bullish at 500,000 long term, and they basically expect that BTC should replace gold's market cap. That is a $9 trillion market cap, and Bitcoin right now is merely 200 billion market cap. That's about 45-fold. The reason of that is because they said investors generally store of value has been gold, oil, and dollar, and Bitcoin is an alternative asset. In the case of gold and oil, they're very hard to store, they're very hard to transport, and the supply is also not fixed. And they are well-known assets for inflation, and they're very precious on Earth, but not overall in the galaxy. That's what they say. And there could be a time when a plunged supply of gold or oil is found, and the demand is not much, and that could really affect the price. But in case of Bitcoin, that doesn't happen because the asset side is fixed. And what they expect is the fear of inflation has destabilized dollar so much that it's made its 7-year low, and money in the banks are just becoming pretty useless, and money in the stock market and real estate will keep up pace with this inflation. But they feel that gold and Bitcoin are the ultimate investments to hedge this. And what they predict is that Bitcoin is going to win this race of inflation. So that's basically what they mean is that the supply is fixed, everything, inflation's coming. Warren Buffett's bloody buying gold. That bastard. Sorry Warren, but he's never bought gold in his life, and now he's buying. Ray Dalio is buying gold. Even the Big Short guy is buying gold. So everybody's buying gold right now. Mark Baum is buying gold. So it's kind of good, and you should buy Bitcoin as well because it mitigates all the risk that gold has with it. So ETH is about to become scarce, as we said. That's the new proposal of EIP 1559. So ETH has been one of the best performing assets this year, about 400% from its low of 100 this year, and it's range bound right now between 370 and 420. So earlier this week, Vitalik on the blockchain proposed that, having an EIP 1559 proposal. So what does that mean? EIP 1559 proposal. So what it basically means that, right now Ethereum is generated when a transaction is approved. And so and every transaction that is approved, it generates an ETH because it's like a proof of work. So what it's proposing is something like Bitcoin halving is to reduce the fee. So what he's proposing is that reduce the fee. That means reduce the reward that the miners get. So the fee remains the same, but the reward that the miners get reduces. So they charge the user $1, but they pay the miner 50 cents, and that 50 cent that was supposed to be generated, it just gets destroyed. So, but they're going to charge the user more. So that's a fucking bastard, man. So whatever it is, so they want to reduce the supply. That reduces the supply of ETH, and because ETH doesn't have a fixed supply, and ETH is developed as the transactions go through in the blockchain and through the block. So how would this do? They would reduce the supply. As I said, the reward for the miner reduces. Now Ethereum is shifting to proof of stake, as I said earlier on in my projections. So what does that mean is that there won't be any nodes or miners. There'll be validators. So the more amount of Ethereum you stake on the network, the more chances are for you to win the validating reward and basically get rewarded with ETH. So the number of validators are going to be far less than the number of miners right now, because the cost of entry to become a validator is quite high, and it includes a period of 2 years of fixed dating your assets. So minimum is 32 ETH, and as the price is going up and up, so the number of validators are going to become quite low. And as people stake their ETH into the network, so the current supply of ETH also gets affected. So it basically reduces the supply a lot. And with the DeFi space growing at a compound average growth rate of 514%, Ethereum's demand is increasing. But the supply side of it that's what Vitalik is focusing right now, is to reduce the supply side of it. So general normal math, supply and demand, boom, boom, boom. We could see ETH touching and breaking those 750 levels as we predicted. So our prediction right now is, that consolidation is happening, and we expect consolidation to happen before a large breakout happens. So we are 50% bullish, 50% bearish, and that's what we feel right now. That let the market consolidate, but we will be, let's say, we are more on the bullish side. Thank you guys for this week, and hope you guys enjoyed. See you guys next week, and happy trading. Bye bye.